So I've got another company that just might be better than Nio. Now they've been operating in stealth mode for the last 5 years, but now they've come out to play. So you want to stick around for this one. Welcome to Stock Flicks. If you're new to the channel, this is the place where you get the best in class stock picks. I'm a former banker, but my passion is stocks and shares, which is why I come on here each and every day to help you guys make money in the stock market. Now, this is episode number 2 of the series I started called Better Than Nio. This is where I go out searching for companies that might just generate a better return than Nio. Now, this is because I think Nio is a fantastic company to use as a benchmark. It's a real growth asset and it's doing things well. So without further ado, let me introduce you to Arrival. Now, Arrival are an electric vehicle manufacturer, but they're focused on the commercial space. So they're focusing on vans and buses. Those are their 2 first product lines. And I must say they are fantastic looking, very stylish, very modern, just what I want to see from an electric vehicle manufacturer. Now, they're not available yet on the stock market, but they're going through a reverse merger with CIIC Merger Corp, and they're going to be listed on the NASDAQ very, very soon. This is going to be under the ticker symbol ARVL. But CIIC Merger Corp is listed at the moment, and their share price has moved quite interestingly since the announcement. So let's jump in and look at that. So the announcement of Arrival's listing onto the NASDAQ took place around the 18th of November. Now, since then, the share price has appreciated about 28%. This is great. You can see the market is really gearing up, looking forward to Arrival's listing on the NASDAQ. But if we look at the last few days of trading since Thursday, it's been trading flat. And this, to me, is a good sign. Why? Because as soon as there's any positive announcement, any good business news, you're going to see, boom, share price is just going to rise. That's going to be fantastic. That's why we're looking at Arrival right now, so we can jump in when those shares are trading sideways, just before any positive announcement, and then make those returns when there is an announcement. So this is good, exactly what I want to see. So now let's compare Nio's share price appreciation over the same time period. So over the last 5 days, 20%. But let's now look at over a longer period of time, like a month. Nio has risen 80%. Over the last 6 months, 1000%. So it's not to say Arrival is going to increase 1000%, but we know the potential of share price appreciation in the electric vehicle market if the asset is performing well. So as investors, we want to get in now before its share price explodes. So that's why we're talking about Arrival today. So if we compare their products, Nio has their ES6, their EC6, their ES8, and they're coming out with their EE7 sedan soon. Arrival, on the other hand, focus on that commercial space, their buses and their cars. But there's opportunity to expand into taxis and into box trucks and to heavy equipment vehicles. Now, this is interesting because there's a lot of money being spent by governments and by private companies to make that switch to electric and meet regulations. So this is a really interesting opportunity. Now, with regards to your portfolios, just with a Nio investment, your portfolios are not going to see the dollar inflows from commercial EV companies. So to really build out that nice balanced portfolio that's really capturing all angles, you want to be looking at commercial EV companies as well. So now let's move on to manufacturing, because this is where it really gets interesting. So Nio, if you don't know, their cars are produced by a third party called JAC Motors. Now, there are some capacity issues there because JAC Motors can only produce 5,000 units per month, and Nio are reaching that limit at the moment. So Nio have to come up with creative ways to extend that capacity through double shifts and through factory extensions. Now, Arrival, they're changing the game. They have these micro factories. Now, these are smaller units, about 10,000 meters in size, and they can get these set up within 6 months, anywhere they want. Now, they're able to produce their cars very, very quickly in these micro factories by drawing resources from nearby warehouses. These micro factories are set up so they can produce any Arrival vehicle to the customization of the region that they're producing those cars. This means that using their micro factories, they're getting rid of that old school capital intensive manufacturing system that has been in place for many, many years. And this is a key USP for an investment in Arrival. These guys are revolutionizing the manufacturing game. It's fantastic. So something to look into if you're looking to make an investment into Arrival. And this is a nice segue into a discussion on price of the products of these two companies. So Nio's cars, if you take their ES6 model, the basic version is around $52,000. Now, they're able to manipulate that price and get it down about $10,000 through the use of their battery as a service, where the purchaser will purchase only the car and lease the battery on a separate monthly arrangement. This gets the car price down to about the low $40,000 mark. By Arrival, because of their use of their unique manufacturing process through their micro factories, are actually able to produce vehicles at the same price points as their petrol and diesel equivalents. Now this is fantastic, because a real sticking point, if you didn't know, in the electric vehicle market was that the prices of these cars were too high. But now Arrival have managed to create a system where they're able to produce the cars at the same rate. So this is fantastic to see as an investor. So if we touch on their geographic reach, Nio only operate in China, but they're looking to expand into Europe. Now, China is a massive market, so there's a lot of money to be made there. They make no sales outside of China. Their European expansion is slow and steady. There's not been too much news, so they're just getting things set up. So it'll take a while for this to get up to speed. Now, Arrival is actually a pre-revenue company. They're a UK-based company, so they're obviously looking to supply their home nation. But they've secured a $400 million deal with UPS to supply 10,000 vans. Now this is perfect, but they're looking to supply those vans across UK, Europe and North America. So they've already got their geographic web going. This, as an investor, is very, very good to see. Now this is a rich relationship that dates back to 2019 with UPS, where they trialed 35 vehicles. Now there could also be a deal with Royal Mail, which is the UK-based postal service, in the near future, because Arrival actually have a history with Royal Mail as well. In 2017, they trialed 9 of their vans. So from a geographic point of view, it's looking very, very good from Arrival. They're in several different continents. So as an investor, this is fantastic to see. So now if we move over to their financials, Nio is a very, very fast growing company. In their Q3, they reported that they grew about 150% year over year. Now Arrival is pre-revenue, but we shouldn't be looking at revenue. We should actually be looking at their cash position in this case. Now, from the merger, Arrival are going to have proceeds of $660 million. If you add that to the 100 million euros that they received in January from the Hyundai Motor Corporation and Kia Motor Corporation, this brings them to a cash position of about $750 million. Now, that is just what has been revealed in the market. Now, there's probably more cash that they have. So I would estimate they have cash up to $1 billion. If you compare this to Nio's cash position, Nio have a cash position of $3.3 billion. Nio is further along their journey, they're making sales, they have a lot more expenses, so they need that cash. But it's good to see Arrival with a very nice cash position of close to $1 billion. Now, Arrival have said that they should reach profitability by 2023, and this is a large part due to their USP being their micro factories. If you compare this to Nio, Nio are actually pre-profit on a net income basis. Gross profit, they've got about 12%. I did some analysis, I'll leave a video here of where I predict Nio could have reached net income profitability by Q3 or Q4 next year. So go check that video out. So in terms of which one I think is a better investment opportunity, I'm gonna have to still go with Nio. Now, Nio are a fantastic company. They're growing rapidly. Their margins are improving. They're operating in a really big market, and they've got a very powerful brand. There's less risk associated with an investment into Nio, but I think that Arrival is a really good complementary investment to Nio. With Arrival, you're gonna get that commercial EV inflows into your portfolio, and that is a really rapidly growing and massive opportunity for you guys. So guys, that brings us to the end of today's video on Arrival. Please do hit a like on this video, it really helps the channel out. Go do your diligence on Arrival and consider adding them to your investment portfolio. Now remember, if you want to buy them, you have to buy CIIC Merger Corp. That's ticker symbol CIIC. Thanks for tuning in today. Please do hit a subscribe on this channel. I've got plenty more videos coming for you. So I'll see you on the next one. Take care.